Hey everybody, hope everyone's doing well and had a good day. This is the Emini review for Wednesday, March 12th, 2025. It's going to be a brief recap. We'll just talk about the major breakouts today. The major leg 1 breakout equals leg 2, and just breakout and second legs as a whole. I think that's the most important thing for price action trading, and I really want to get that point across, and that's why I talk about it in every video. So as we go into the day, you can use yesterday's context going into the close. We have a strong rally, a trendline break, and then a gap up testing this bull trend's extreme. So testing the highs and what happened on the open. Gap up, bad follow through, bar 1, bad follow through, bar 2. And then maybe a give up bar, bar 3. Bar 3 is a bear breakout. Broke below bars 1 and 2. It's a strong enough bar that is probably going to get a second leg down. We pull back on 5 and get a second leg down, 6 and 7. But this trendline break is minor, and this channel down to 7 is tight. And when you have a tight channel on the 5-minute chart, you know it's a breakout on a higher time frame, maybe the 10-minute, 15-minute chart. This is a bear breakout. So we have a double top after a trendline break and a retest of the bull trend's extreme. Now we have a pretty decent bear breakout. Bars 1 through 7, strong enough bear breakout, second leg down, likely. So we have a reversal attempt on 8, but then bad follow through 9. The bulls really need a second reversal here. This is too tight to look to buy the first reversal. Plus, 7's a bad buy signal. What about bar 10? It's a second reversal, but the signal bar is bad. So traders might wait for a better signal bar. Bulls want a double bottom, and ultimately they failed. 13 broke below what the bulls were hoping would be a double bottom. And when that happens, you can get a measured move down. And there's that measured move. Look at bars 13 through 16. Another bear breakout. And it's not too climactic. 13's a little big, but 14, 15, and 16, fairly uniform sized bars. Controlled selling. It's a really tight spike and channel trend on a smaller time frame. And it's a breakout on this time frame. And it's a strong enough breakout that there's probably sellers above. The first reversal up will probably be minor, therefore a second leg down is likely. So then we got 18, 19, and 20. And that's another bear breakout. What's the problem with 18 through 20? Well, one problem is that it's a late leg. 7, 16, and 20, we're overshooting a bear channel line. It's a third consecutive sell climax. 1, pullback, 2, pullback, 3. We can also look to the left. We have this strong rally, likely to get a second leg. Was the gap up the second leg? It might be, but it also just might be a pullback of the pullback, a pullback of this reversal attempt. So rally, pullback. The pullback was strong enough for a second leg. The pullback gets its own pullback before getting its own second leg. And now in this area, the bulls might be setting up a big high 2. High 1, high 2. So we look over here to the left and we see support. For example, bar 54, it's a bad stop order buy signal bar, probably support in this area. You can see the market tested here, broke below it, but got bad follow through and then reversed up. Then we got a 3-bar micro channel, 21 through 23. Strong enough rally that will probably get a second leg up. And if we think through the day structure for today, is this going to be another bear trend day? It might be, but we have 3 consecutive sell climaxes we're still within yesterday's range. We're not below the prior day's low. The bulls want this rally to get a second leg. And even if, we got these deep pullbacks, the bulls still want a higher low here. Even if it's a broad bull channel, they can argue it's a bull trend. And ultimately, that's what we got. We got a higher low, 20, and then a strong rally. The context in this area was good for the bulls because the bears already had a couple of legs down, were testing support, and the approach was a third consecutive sell climax. So the bears are exhausted. They're probably going to wait for at least 10 bars and 2 legs, sideways to up, before they look to sell again. After a third leg down, you often test the start of the third leg, which would be the 17 high here. But look at the approach. We have a micro channel to bar 25. Really not great selling pressure. This is a strong bull breakout, and it's a reversal. And again, it's strong enough that the first reversal down will probably be minor, which means you have buyers below the first reversal attempt, which we didn't get until bar 28. Buyers below 27, and we get a small second leg up. Is this the second leg to bar 29? Probably not. Usually you get a more symmetrical second leg after such a strong rally in pretty good context. So as far as breakout, pullback, second leg, is that it? Well, this entire channel is too tight to look to sell against. So you really need a trendline break and then a retest of the bull trend's extreme, ideally, before you look to sell. So the rally continues, and the bulls got closer to a leg 2 measured move there on bar 38. And you can see the selling pressure as we approach that magnet. Still minor reversal. Look at bars 38 and 39. Disappointing if you're a bull and you bought up here. You're trapped. So what happened on 38 and 39? Tight bull channel, and let's say, it's not the greatest buy up here. After maybe 2 or 3 legs up, you're losing momentum. You're getting higher. In the range, it's still a lower high. Not a great buy, but if you're long for any reason and you hold through 38 and 39, it's a deep pullback and you're disappointed. And if you're a bull, you're trapped into a losing position. If you're flat or if you're a bear and you did not sell, then you missed a pretty good scalp, and that creates resistance. Bulls and bears are looking to sell a pullback. So 38, 39, strong enough bear breakout, second leg down, likely. Vacuum test of resistance on 40. Big down, big up. The bears get their second leg, but 40 was disappointing for the bears who sold down here. If you sold a closed 39, you're holding a losing position on 40, and that's going to create support down around the 39 close. Bears who sold trapped into a losing position, looking to buy back shorts. And if you're a bull and you missed the rally and you're flat, you're looking to buy, you're trapped out of a winning position. That creates support below. 41, 42. Really, this might be 2 legs down, nested for the bears. 1, deep pullback, 2, and 41 sold off and rallied, leg 1, and 42 sold off, that's leg 2. Also, 42 looks stronger than 41, which is characteristic of a second leg trap. Lots of overlap, 1 pullback, 2. 42 might be a second leg trap. If you're selling here, you need momentum, and if you don't get momentum, 43, you might bail out of the trade, and then we reversed up 44, 45. But this is enough sideways, and this is a minor bull trend. You still look to the left, big down, big up. So the bears may have done enough here that maybe this is a contracting triangle, which can often be a final flag, the last bull flag before a reversal attempt or an opposite trend. And in this case, it was a final flag. So we went sideways, the bulls get trend resumption, but it ended up being a major trend reversal setup. So sideways for enough bars here. Bulls are disappointed here at the 38 high. And what are they going to do on the retest? They're going to look to sell. You have bulls who are disappointed in this lack of momentum high in the range. They're going to look to sell out of longs. And then bears are going to look to sell. We're high in the range. We've gone sideways for enough bars. Maybe this is the trading range. Traders are going to buy low and sell high. So we're high in the range. Traders sell. 2, 3, 4 consecutive bear bars. Then we got to give up 53, 54. But what happened here? Why did we sell off down to 54 only to reverse right back up? Well, we still had this tight channel. If we look to the left for support, what happened over here? With the market cycle, we broke out, pulled back below 27, and this is going to be support. Spike, pullback, channel. The channel evolves into a trading range, and the start of the channel often becomes the bottom of the trading range. You also have a gap with the 27 high and the 29 low. There's a micro gap. And this gap is probably going to act as support as well. 27 was not a great stop order signal bar, but we broke out and got follow through. 30 retested these prices, but did not close the gap. So there's a negative gap or a body gap. And the two prices I have in the horizontal lines here represent support. This is a buy zone. So we rallied again up to bar 64. And what happened at the highs? Well, we can draw a channel line, and we have 1, 2, 3 pushes up. And if you count the minor pattern on the way up, reversal 55, pull back, small buy climax, pause, buy climax, pause, buy climax. This is 3 or 4 legs up on the smaller time frame, and it's 3 legs up on the higher time frame. Context, look to the left, we're high in a trading range. So there might be more sellers up here, despite the tight bull channel. This is why context is so important, because you can say it's a tight bull channel, only look to buy, but if you look to the left, big down, big up, how many bars are actually breaking out of this range? The answer is really 0. 64 tried to break out, but it just poked above and could not close above. That's a failed bull breakout. And then we got a reversal, 65. So 65 is really, in this context, in this area, I think it's reasonable to exit longs below 65 if you're long for any reason, because there's too much of a risk that we just do this and this pullback drift sideways to down because we're at the top of the range where traders are looking to sell. So bulls are going to look to take profits up here, especially when they get a failed breakout, and bears will look to sell to go short. It was a tight bull channel, and just like over here was a tight bull channel with support to the left, you can look at the same over here. 56, bad stop order signal bar and open gap. Trading ranges, gaps often get closed or they get retested, so this is a price to look out for. We rally, fail to break out to the upside, drift down, and look at the reaction around this price. 71, bounced on the support. 74, 75, failed to break out below. 77, failed to break out below. So there's a reaction, there's support at this price. And ultimately we just ended up drifting a little bit below it, but you can see it's really interesting, the reaction to those levels. That's going to be it for today's recap. Thanks everybody for watching. and I hope everyone has a good night.